Hearing in appeal of Orsted West of Duddon Sands, UK Limited Limited, against the Commissioner for His Majesty's Revenue and Customs.
Wilson.
My Lords and my Lady, I appear with Miss Parry, KC, and Mr Jones on behalf of the appellant, the HMRC. And my learned friend, Mr Jones, KC, appears for the respondent companies. This case raises a point of statutory interpretation of general application. So what I'd like to do is really give a very, very short introduction to the factual, the context in which this issue arises, and then move on to our submissions on the law and the statutory interpretation. And then Ms Parry will address some points of factual detail at the end of revenue speaking time, most probably after a short adjournment. So, by way of very brief introduction, this case is about the meaning of the words on the provision of plant and machinery in section 11(4)(a) of the Capital Allowances Act 2001. The question arises in the context of capital expenditure incurred by the companies on certain studies and assessments. And these studies and assessments were the subject of detailed findings of fact by the first tier tribunal. And just for your notes, there's a summary of the findings. It begins in the Statement of Agreed Facts and Issues at paragraph 56, and that's at page 18 of the main hearing fund. I don't propose to take you to those, but I understand that your Lordships will, and my Lady, you have read the Statement of Agreed.
Yes.
So these studies played an advisory role and a data gathering role in the process of the design and development of the Gunfleet Sand wind farms, there were two of them, the Walney wind farm and the west of Duddon Sands wind farm. And in our written case, we called this the expenditure on these studies. We said it's a pre-development expenditure. We weren't intending to be controversial or contentious there. We were trying to capture the idea that the expenditure is not on the actual build, on the actual construction, the actual fabrication, the actual purchase or installation of the wind farm, the turbines. It's something prior to or preliminary to, we say in an important way, a way that's relevant to the statutory test.
What do you say about design?
What I want to say is that that's the wrong place to start because, first of all, the design and the development is the conceiving of the plant in question. And when I make my submissions on the statutory words and the statutory policy, I'm going to say that's a separate preliminary process to the process that the relief is concerned with, which is the cost of the actual acquisition. And so
just to be clear, it was because you were using the term pre-development expenditure. I was getting the impression that you were therefore saying that costs of design would not count.
Costs of design, if design is given a broad meaning, so conceiving of, exploring, researching, testing out models, then we say that the expenditure on that is not allowable. That's a broad meaning of the word design. But there's another meaning of design which it can be used to mean the final drawing which is actually made real. So that's the drawing that Siemens, the manufacturers, take and turn into the plant. Now that may or may not, on the facts of a particular case, be part of, it'd be an expense incurred on the provision of the plant. So I suppose I'm a bit wary of the word design because it can be used in different ways to mean different things. It's not a statutory word, it's not in the test. You have to look at the particular expenditure to see what it's actually on and then assess what that is by reference to the statutory test. Whether or not you can call it design or not, I expect, isn't the...
But you're saying even the design of the final drawing may or may not count.
I think what we say in our written case is we can see that if, depending on the evidence in the case, that may fall to be a cost of the actual provision. what Ms Parry will just explain in more detail, but we don't have those findings of fact in this case.
I mean, the reason I ask is that it seems to me pretty central to understand what your case is in relation to design in order to know whether these other costs that we are concerned with are analogous or bound up with them.
Yeah. Well, and so that's why I want to move really quite swiftly on to what I actually say the test is.
Yes, thank you.
That's right. You've just given us two examples of design. You say one falls one side of the line and the other side of the line. But defining the line might be difficult.
It all turns on what the words, I mean, it all begins with the statutory words. And so just finishing off, I mean, my intention in introducing this was to be trying to be neutral and not really, just to be neutral. There is, again, just for your note, there's a description of a wind farm in the Statement of Agreed Facts and Issues at paragraph 26. And it's a collection of wind turbines situated offshore in and over a large area of seabed, connected by cables, and then further connected via a transformer to the public grid. In the Statement of Agreed Facts and Issues, there's also an explanation of what, there's a term generation assets. So in this case, it's the generation assets that are the plant. So when the Court of Appeal find that the expenditure was incurred on the provision of plant or machinery, the plant that they're referring there to are the generation assets. And that's described in the Statement of Agreed Facts and Issues at 27. And it's the wind turbines and the array cables. And it's different from what's called the transmission assets, which, for regulatory purposes, the definitions arise out of the regulation. The first two concluded the generation assets at each site are a single item of plant. So that's the plant. So then if I could move to what our case on the statutory words, to make our case on the words. And just as an overview, so our case is this. So the case is about plant and machinery capital allowances. And so the dispute centres, as it happens, on when capital expenditure is qualifying expenditure. So that's the term that's used in section 11.4. Our case is essentially that qualifying expenditure, the expenditure that's incurred on the provision of plant within section 11, is essentially the acquisition cost. So it's the expenditure incurred on the act of providing the plant in question. And we say that, and I will develop these points further, because that's the ordinary meaning of the words that are used in section 11. And because so construed, section 11 provides a rational and objective measure of cost, of the cost of the plant and machinery. In the context of plant and machinery capital allowances. Now, the cases are clear that the policy or the statutory purpose of the plant and machinery capital allowances is to act as a proxy for depreciation. And the relief for which section 11 is defining qualifying expenditure is a relief, so depreciation, which, looking at the legislative code, in its net result, it is just that. It's a relief for wear and tear of the plant in question, so the plant that you've acquired. And we say if you read the words of section 11 to mean the acquisition cost, you've got a cost that is meaningful in the context of a relief, which is a proxy for depreciation. And I will develop those points by taking you to the cases and the words. And we say that that approach is confirmed by...
And is that because with a capital allowance, you can't just deduct the whole capital allowance in year one, you deduct it, percentage of it over a period of time, is that right?
It's because, and I will... it's the case of Orsted, actually, which has got a very nice summary of it. But it's because you begin with cost, and that's your prima facie amount that you write down. And then, certainly with a writing down allowance, sometimes Parliament, to really encourage investment of a certain type, will give an initial or first-year allowance. So you'll get a bit more up front. But the default or ordinary allowance is a writing down allowance. So you say, in the legislation in the bundle, it's 18%. Each year, you can write down 18%. So that is, in a sense, an estimate, taking into account how much relief Parliament wants to give of the loss in value of the item of plant due to wear and tear. But then there's a reckoning up. So when if there's a disposal, you then must bring the disposal proceeds into account. So if the 18% was too over-optimistic or not optimistic enough, you have a reckoning up. And I was going to give you an example of how this works.
With the reckoning on the basis of the proceeds of disposal?
Yes, yes. So the paradigm case would be you buy in the open market, or you get construction services in the open market, so your cost is an open market cost or purchase price. You write that down. When you dispose, paradigm case, at open market value, you can see whether it did indeed fall in value and by as much as Parliament gave you the relief or the writing down relief. And if it's fallen much further in value, you get a bigger allowance. And if it's fallen much less, then there's it's slightly more complicated with pooling, but it doesn't change the concept. There's a balancing charge. So that in the end, you end up with a proxy for depreciation for wear and tear.
What is the relationship between depreciation and the cost of replacement plant and machinery? Is there a relationship conceptually as a matter of accounting between the depreciation of the capital asset and its replacement cost?
The answer to that as a matter of accounting would be I don't know, right. But also it's not relevant.
It's a matter
because
of tax.
I mean, to be clear, of course, I will take you to the case law, but this is the underlying statutory policy as described in the case law. Yeah. In the end, of course, you've got to construe the statutory words and see if that's what Parliament did. And what is very clear, and I can move on to that now, is that that Parliament has moved away from very clearly the accounting treatment, is that this is absolutely not an accounting test.
Not an accounting point.
Since I'm there, I'll go straight there. What I'm going to do as a general theme is I'm going to start with the general nature and purpose of the regime, then look at the statutory words, and then address Berkeley, Carl, Benedetto. They're really the two key
So is this right? You would regard it, or you would submit that it's irrelevant whether as a matter of accounting principles and practice, the relevant expenditure here was part of the cost?
Absolutely,
and how it would be accounted for in the accounts.
And I can make that good in there are many ways to do that. The capital allowances regime fits within the UK tax regime, and it is a fundamental principle of the UK tax regime, which is there's no deduction in calculating profits of a trade for items of a capital nature.
Right. And
of course, we're plant and machinery, property, and so on. We're talking about items of capital expenditure. So Section 53, the rule is long standing. It's currently in Section 53 of the Corporation Tax Act 2009. So no deduction for items of capital expenditure.
No deduction from profits.
From profits. In calculating profits of a trade, no deduction is allowed for items of a capital nature. So that means that the fact that the accountants are depreciating your plant and machinery in calculating your commercial profit is irrelevant. Whatever they do, And those rules in GAAP might change from year to year according to whatever accounting principles are pursuing as a policy. It doesn't matter what they add into that. Whatever they do, you have to add it back. Because
Well, I suppose I was thinking this, that if you, the expression expenditure on the provision of plant and machinery, how different is that from the cost of plant and machinery?
It all depends by how you measure cost, I suppose.
Well, I
and
think
the
that's
accountant
right.
shows that the accountants measure costs differently to.
All right.
So,
well, but they're all both of the. I see that. I mean, expenditure on the provision of plant and machinery is an English phrase. It's not got a technical meaning. But I think you're saying that the cost of plant and machinery for the purposes of GAAP, UK GAAP, is technical and a term of art. Is that?
It's a function of whatever the accounting rules are in GAAP.
Of course, but they are trying to find a true and fair view of what the cost of plant and machinery is.
But first of all, Section 53 says whatever they do, you add it back in, and that is your starting point. And then you see in the cases like Benedetto, very clear statement that you're not accounting treatment is not informative or determinative.
Well,
so,
you'll take us to that.
Finance costs, for example, interest might seem an incredibly accounting.
Well, I think it'd be very unlikely the accountants would include finance costs,
yes, they
would
do.
they, as part of the cost of the plant and machinery?
Yes,
do they?
Yes.
Even though those finance costs are incurred year by year.
They're treated as a cost.
Sorry?
Well, in Benedetto,
okay.
Yeah.
All right. Well, that
but
probably
then that's
proves
why
your
one
point,
doesn't look to the.
Well, thank you very much. Thank you.
But there is revenue deductibility, looking at the tax regime, and then there is this capital allowance regime. But there is then capital expenditure, on your case, which is not deductible either as revenue or as the provision of plant. But how that category of capital expenditure, for which there's no allowance and it's not deductible, how that's then dealt with in accounting terms is a different, and you say irrelevant.
Absolutely irrelevant, yes. And of course, the case law is littered with cases where the taxpayer has failed in its capital allowances claim and has got absolutely no tax relief for a genuine business expenditure that the accountants have treated as highly relevant to determining commercial profit.
Yes, yes.
Now, the regime itself, I've already sort of intimated at it, but it's helpfully, I would say, summarised in the case of Altrad at paragraph 16. So that's page 491 of the main hearing bundle. Now, this is a decision of the Court of Appeal. The case itself was a very, very artificial tax avoidance scheme. Capital allowances tend to attract avoidance schemes, usually by use of finance or artificial transactions. There's always an attempt to step up the amount of qualifying expenditure in one way or the other.
The amount of what?
To step up the relief, usually by circular borrowing. So, but the background is a tax avoidance scheme that didn't work. And in the course of construing the legislation, so Section 11 and Section 61, the courts say this, and they adopt and approve the description from the upper tribunal. And they say, in relation to Section 11, Section 61, and the allowances, the wider context of these key provisions was helpfully explained by the upper tribunal in an overview of the relevant part of the capital allowances regime, which they placed near the start of the upper tribunal decision. The depreciation in value of plant and machinery and other capital items does not give rise to deductible expense for tax purposes. The 2001 Act seeks to reduce the impact of this rule, and I guess reduce, not eliminate, by providing for capital allowances to be given by way of a deduction against taxable profits in respect of expenditure on, amongst other things, plant and machinery used for the purposes of a qualifying activity, which includes a trade. Allowances are generally given on a pooled basis. That's for administrative convenience. I think originally a trader would have to track each and every item of plant and machinery, but now you pool by reference to certain categories, and that's really just administrative convenience. So allowances are generally given on a pooled basis, so a taxpayer incurring expenditure to acquire plant and machinery increases the pool of expenditure qualifying for allowances. Allowances are made as a percentage of the balance available in the pool being reduced by a percentage of the pool being reduced by the amount of the allowances given, known as the reducing balance basis. A taxpayer selling plant and machinery that's qualified for allowances in any accounting period is required to bring the sale proceeds into account as a disposal value. And the amounts brought into account as disposal value reduce the expenditure in the pool eligible for allowances in subsequent counting periods, or if the disposal value exceeds the balance, creates a balancing charge. So that was the basis of the regime that I described just in my opening. And the description goes on. The general rule set out in section 11, now this is the rule that we're concerned with today, is that expenditure on plant and machinery qualifies for allowances if the expenditure is capital expenditure on the provision of plant and machinery, it's incurred for the purpose of a qualifying activity, and the person incurring the expenditure owns the plant and machinery as a result of incurring it. And then section 61 deals with disposal events, with the paradigm example of such an event occurring when a person ceases to own plant and machinery. As Mr. Peacock QC put it in oral submissions, section 11 and section 61 are bookends, with section 11 providing for capital allowances to begin to accrue when plant and machinery is purchased, and section 61 providing for future allowances to cease to accrue when it's disposed of, brackets, to the extent that disposal value is brought into account, as well as recapturing excessive allowances that have been given. And I note there that concept of recapturing excessive allowances isn't just let's do some maths and find that the computation produces a plus or a minus. It's by reference to the statutory policy, which is this is a proxy for depreciation, a relief for the loss in value of the asset due to wear and tear. And then at page 514 of the bundle, there is, at paragraph 77, just one of the sort of classic descriptions of the capital allowances code. Lord Nichols in the MBF, which was another tax avoidance scheme, a trader computing his, and of course this is accounting profits or losses, will ordinarily make some deduction for depreciation in the value of the machinery or plant which he uses. Otherwise the computation... paragraph 77, it's just by C on page 514 of the bundle.
Oh, I see, in the same case.
Yes. In the same case. And so then you begin with your accounting profits, which will ordinarily make a deduction for depreciation in the value of the plant and machinery. Because otherwise the computation takes no account of the need for the eventual replacement of wasting assets, and the true profits will be overstated.
So there is the link that I was asking, I was pondering, if you like.
Yeah.
Lord Nichols identifies a link between depreciation and replacement.
But it's a sort of purposive, it's part and parcel of the concept of plant being wasting asset, I suppose, which is at some point... Yeah. A trader may or may not be able to afford to replace it. No, but at some point it becomes useless through use and may need to be replaced.
Yes.
So, I mean, if anything is to be made of it, it's consistent with the concept of the acquisition cost, because there's lots of work, for instance, in this case, that why would you do it again? Why would you need to do a study to determine that you're not going to build your wind farm over there. That's done and dusted. You've actually built your wind farm here. So if you are, and I'm not suggesting that one sets up a replacement test or reads those words into the statute, but just as a, I guess, in this policy or purposive consideration, that's where I would say, well, why would you expect to get why would cost on day one include that very remote?
Right, so if one of the wind turbines broke or wore out, you don't need another Benthos study or
exactly
unexploded ordnance study to build it. You
Yeah.
do need another wind turbine
Yes.
and the steel and
Yes,
blades that
yes,
go into that.
yes, yes.
Right.
And then Lord Nichols just finishes, but the computation required by Schedule D has always excluded such deduction. So no deduction, whatever it is the accountants do, it doesn't matter. Parliament therefore makes separate provision for depreciation by means of capital allowances. And then, in addition, generous initial or first-year allowances exceeding actual depreciation are sometimes provided, although they are still subject to the same regime. So if you dispose of it, you still do the reckoning up to see whether it was right that you should have got a 100% deduction of 100, because if you sold it for 80, then so on.
Are those allowances within the scheme of capital allowances?
I'm sorry. So
There's a reference in the last line to generous initial or first-year allowances
yes.
exceeding actual depreciation. Are those within the scheme?
Yes, they are. Yes, they are. And they obviously they have different names from time to time, but there are still first-year allowances.
They're still
First-year allowances.
They
Yes.
still exist
Yes.
to some extent, do they?
Yes.
For some, and that's how the policy, if you want to encourage people to make a particular investment in plant, that's how you do it,
Yes.
right? Saying you can deduct, or yes, you can have an allowance for more than the normal amount
Yes.
in the first
Yes.
year. I mean, it's still then there may well still be a reckoning later if you
Yes,
dispose
and there
of
is,
it,
and there is.
but you get that initial boost, as it
Yes.
were, to your bottom line.
I suppose it's like a loan from the interest-free loan from the government. Is if it's depending on how it works.
Yeah.
Yeah. So it's an incentive. And so I was just going to give I hope it's a simple example. It's very simplified. I've got one item in my pool, so I'm a trader with only one item of plant. I buy an item of plant in the market for 100, so my qualifying expenditure is 100, and I've got available qualifying expenditure for 100 because I haven't claimed any reliefs yet. So I claim writing down allowances, and let's say the percentage is 18%. So I write the 100 down at 18% to 82
In your first year.
in my first year, and then I'm making claims to do this. And then I can set that 18 against my taxable profits. Then I carry forward the 82 as my new available qualifying expenditure. And then suppose there's a sale for 90. So you deduct the 90 from the 82. Now, then there's a net, there's a -8. So here there'd be a balancing charge. The 8's clawed back. But the net, the 10, becomes a permanent relief. Now, if I sold for 70, the value's gone down more than Parliament estimated or allowed me to claim allowances for. And so I deduct the 70 from the 82, and that gives a positive amount of 12. So there's a balancing allowance. So I get an extra relief. And the disposal value that you bring in is always capped at the amount you actually spent on day one. So that's just a detail of the regime.
So you can't have you can't bring anything into the pool that's more than what you originally spent on it.
Yes.
Right, so that does make it then important, well, doubly important, what you incorporate into the initial £100, because the more that can be, the less likely it is that there will ultimately be a balancing charge that you have to pay.
Absolutely, and this is why HMRC, you can call it remoteness, but I understand that remoteness is used in other contexts and has, in contractual law. Let's call it proximity, not remoteness. But the more proximate the expenditure to the actual acquisition, the more relevant it's going to be to the statutory purpose. And that's why these concepts are relevant. And we say sort of built into actually the statutory purpose, the statutory words on the, not why or for the purposes of, but on the provision. And it's reflected when I take you to Benedetto and Berkeley Curl. I'll say it's reflected in how the House of Lords describe the relief. But I just wanted to give an example, just building on what I said a little earlier, which is, suppose, in my example, I spent 100 on my plant. Now, suppose I spent 300 finding the most suitable piece of land to install this plant. And I had to reject lots of areas of land because they were unsuitable to be the premises for my trade or to properly support and shelter the plant. And I also spent some of that money was on choosing the type of plant that I wanted, what materials it was made out of, what specifications. And some of that would be impacted by my budget. So I'd spend time considering all of these factors. And I may also have had to spend money in order that I got regulatory consents to even carry on this trade at all with any plant. Now, if that 300 can be added in to cost, and this is Lady Rose's, thank you, the Lady Rose's point, it's so remote, if you like. It's hard not to use the word remote. It's a good English word. From the actual acquisition of the actual plant that you acquire, which then devalues through use, that it's unlikely that it's ever going to be reflected in the disposal value. And I don't put it higher than that, but what you get is this perverse situation where the more and more remote the item or subject of the expenditure.
Well, is that right? Because then you build it where it is, and somebody may be more keen to buy it because it's in a good place than they would be to buy it.
Also good,
I mean, you're not talking about the scrap value.
Well, like I don't, because I'm not. This is a sort of. This is what I'm saying. I don't want to put this too high, but just in terms of understanding how one approaches this legislation, is if and bear in mind the Court of Appeals test was anything that with hindsight. So you need hindsight to know whether the expenditure informs something about the design. So we say. It does seem to be rather perverse that the more and more remote the subject matter of the expenditure, the fact is the less likely it is, put it like that, to be reflected in the disposal value. So therefore, the more likely it is that my 300 in my example is going to become a permanent relief. And yet, the thing that really matters, which is actually building the plant, acquiring the plant that's actually used and devalued, that's the most likely to not become a permanent relief in the event that you dispose of it. So I don't want to put it higher than that, but I say it's a sort of perversity of extending, taking a very, very expansive approach like the Court of Appeal, and I say reading in hindsight and so on and so forth, and using very loose connecting words like inform.
So what you're saying really is that the effect of this expansive reading is not just that the initial 18% is an 18% of a bigger sum, which, fair enough, it's a sum they've actually spent,
Yes.
but it has an effect at the other bookend, as
Yes.
Mr. Peacock Casey called it, that when you dispose of it, what you dispose of does not have that value built into it in a way, so you don't get the proceeds of sale reflecting that expenditure, and so the disposal value will be less, and that means there's a bigger permanent relief there in the allowance.
Yes, and it's a criticism and I say really a flaw in the Court of Appeal's judgment is that they take much too high a level to statutory policy, and they just really say, like, why shouldn't you get it? Because it's genuine business expenditure. But that's just sort of passing way over the actual statutory purpose.
Not only that, it's business expenditure that the government makes them do by requiring these environmental impact assessments.
Well, that's right, yeah.
Just give me if you wouldn't mind, the reference in the Court of Appeal judgment to where Lord Justice Newey says that well, why shouldn't they? Why shouldn't they?
Well,
Because
it's probably paragraph 70.
Paragraph 70. Thank you.
And I did want to take you to that actually when I've just done the statutory.
Don't take yourself out of
yes,
please.
Because I say that, yeah, but I will
take us to it when you want to.
But doesn't the approach that you're putting forward, put all the emphasis on effectively the purchase cost of the plant, and then if you like, the disposal cost of the plant? I mean, that, as I understand it, is the focus that you are really emphasising, because that links in with this policy of depreciation and so on. But it does mean that you would be limiting what you were talking about to effectively the actual almost purchase cost at the start, wouldn't you?
So that's when obviously one has to return to the statutory words. So then the question is, without any hindsight, viewing the words, what is incurred on the provision of the plant in question. Now, the case law is clear that that certainly includes the bare purchase price or the bare fabrication cost. But it's then said that in the context of the provision of plant for the purposes of the use in the trade, it must include those, Lord Justice Henderson used the word parasitical, but parasitical items without which the plant couldn't even be switched on. So if you buy a turbine from Siemens, it needs to be transported to the site, or it hasn't really been provided. So it completes the provision. So the case law is clear that you would get costs of transport, mere installation, that's Lord Reed's term in Berkeley Curl. And by that he means that you get the cost of the actual installation, as opposed to, there might be lots of other costs you must incur consequential on having the provision or the installation.
But those costs you wouldn't get reflected in the proceeds of sale when you dispose of them.
The consequential costs. Oh, the transport and delivery. No, but so that's why I say that one always comes back to the statutory words. And in the context of the words on the provision of plant or for the purposes of the trade, the cases are clear that one would include all of the costs or all of the acts of provision. So what you might say is, well, if you're considering a purchase of plant, you could say, well, let's break down what I need to do to the acts of provision that will actually mean that I then acquire that plant. So it'll be purchasing the pieces, maybe assembly, maybe installation, maybe transport and delivery. And they're all within the footprint of the words on the provision of for the purposes of the trade.
But I thought you were effectively saying that the purpose of this provision ties in with the disposal cost and the depreciation. But you're now saying, well, actually, that's only very rough and ready because there are going to be things that the case law tells us have to be taken into account in relation to the wording on the provision of, which aren't going to be reflected in that underlying policy.
But
I'm not sure what the point of referring to the underlying policy
that you've given us is. The underlying policy requires you to be reflecting the language. I'm about to incur expenditure on plant. You need to have the plant in your site. And what the statutory words are describing is, in effect, the acquisition cost. But in the real world of this trader, and the thing about parasitical, that's the word how it's described, parasitical expenditure, is that it's just subsumed in the nature of the expenditure that the relief is intended for. Because it's parasitical, you know, it's not, I mean, Parliament could have been less liberal. It could have said the bare purchase price, I suppose, and it hasn't. It's used this word on the provision of, which captures the different modes of provision, because there's lots of different kinds of plant. And the case law has allowed in also these parasitical items, without which the plant can't be said to have been provided for the purposes of the trade. So it's completely consistent with the policy, because allowing in parasitical items doesn't destroy the policy. It's just a question of how liberal you're being at the edges.
But you might say that everything that the Court of Appeal allowed is parasitical.
Well, no, because I think you assess whether it's parasitical or not by reference to the statutory policy and the words.
Well, that's what they've done.
Well, no, because what they've done is allowed in all these items remote from. I mean,
well, they're saying it's not remote.
There's no. It's difficult to square the outcome of their test with capital allowances being a proxy for depreciation. Once one bears
you've already told us that that's also doesn't work for the ones that the case law that is in dispute, not in dispute.
But only for
costs of transportation, for example.
But only these parasitical items. The only use and purpose of transport, if you buy a turbine from Siemens, is to get the turbine to the site. It is part and parcel of the provision of the plant, the actual plant. And so it's not extending the relief, it's just, I would say, allowing in only parasitical items is completely consistent with the statutory policy.
I'm not sure I understand the distinction, because you said a moment ago that until a generator is transported to the site, it's not provided. But equally, it might be said until it's designed and installed, it's not provided.
But that's looking at it with hindsight. Actually,
well,
that's just
that is an important question, isn't
yes.
it? The angle from which you address it.
Yes, yes.
It has to. The plant has to be vested in the taxpayer before there can be a claim for the relief, as I understand it.
That's right, and so I will deal with that now, because we need to, in a sense, get rid of the idea that one can look at this with hindsight, or that's relevant. We look at section 11, and that's at page 411. and so it's up at the top. So subsection 4, the general rule is that expenditure is qualifying expenditure if it's capital expenditure on the provision of plant and machinery, wholly or partly for the purposes of the qualifying activity, carried on by the person incurring the expenditure. And then B, so that's little a, the person incurring the expenditure owns the plant and machinery as a result of incurring it. Now, they are two, and there are two cases that help make this clear, that Guthrie and Inmarsat. They are two separate rules that do different jobs.
A and B are.
A and B. And if I can give you my submissions on A first. It's a question of whether you do B or A first, but if I can just give you my submissions on A. So what we say is, so this is just reading it straightforwardly as a tax relief. So a taxpayer wants to know, if I incur this expenditure, will it be of a nature that it will meet sub A? So it's qualifying expenditure if it's capital expenditure, well, yes, on the provision of plant or machinery, wholly or partly for the purpose of the qualifying activity. Now, on the provision of means, well, we say on means on, and this is made good by the case law. On doesn't mean ultimately on, and it's not a purpose test, so it's not asking why. What it's asking really is, what's the immediate object in the agreement or the transaction of the expenditure? So it's a word that has written into it, we say, ideas of proximity, because it needs to be on the subject, the right subject matter. And then the provision of, and we say provision is an act. So its ordinary meaning is it's a supply. And there's more than one, because there's more than one kind of plant, there's more than one kind of provision or mode of provision. So that's why the word is apt, because it would cover fabrication as well as purchase off the shelf. But because it's an act of provision, it would also cover those sort of parasitical items without which the plant couldn't be switched on. And that's an installation.
So provision is different from acquisition. So if it said capital expenditure on the acquisition of plant or machinery, then query whether you would include installation in that. But because you've got to provide the plant and machinery, you say that includes...
Well, I think how the case is put it is that plant can hardly be said to have been provided for the purposes of the trade if you can't switch it on. So if you need to do work to install the cooker so the restaurant can use it, installation is on the provision of the cooker.
But is it a test as to whether the plant exists before it is installed? So what installation is what you do when you've bought it or made it. You then have to install it, although you can see sometimes installation and fabrication will be at the same time, whereas here the expenditure we're talking about was all incurred long before the turbines were bought.
I think you don't, and my learned friend wants to do this in his reliance on the case of SSE. One doesn't construe installation because it's not the statutory word.
Right.
Installation is one mode of, or one of the acts of provision if you buy a cooker and you're a restaurant and it needs to be installed so it can be, or a washing machine, and it needs to be plumbed in before you can switch it on and use it. And installation is allowable only because it is part of or an act of the provision of the plant in question. But the other aspect to that question is that does the plant, say, have to exist? But the word plant there does mean the plant in question. It's the particular plant that is actually provided. Now, that's clear from the case law, but it's also then follows from B. Because if you don't, well, it's consistent with B, because if you don't own it, then you can't claim the allowance. But, so then what you're saying is you can get expenditure on the provision of the plant in question. And read like that, you can see that the perfectly ordinary meaning of that is, well, you ask, well, what's the active provision of the plant in question? And you are thinking about, I mean, it doesn't use acquisition cost, but that's the feeling of it, that's the essence of it, because you're talking about the plant in question. So you're saying, if I incur this, does it fall within those words? Well, yes, if it's either the purchase price or it's a cost of installation, because that's an act of the provision. But if you're about to incur a study on whether that area of the North Sea would be suitable to act as setting for the trade at all, then you would say, well, no, that expenditure is not on the provision of the plant in question within the ordinary meaning of those words. It's on the provision of something else. And actually what it's on the provision of is studies and data and advice, which will enable decisions to be made in the course of, I guess, designing and developing your business.
It might be on both.
Well, no, because
the words wholly or partly relevant.
No, that qualifies for the purposes of the trade. So you incur...
Right, it doesn't qualify provision.
No.
Thank you.
So at the time you're incurring the expenditure about whether this would be a suitable area to carry on the business at all. So you've only got a rough idea of what the plant might be. Now, if the plant were installed and created there, it's going to be very different to whatever the plant that you actually end up with in another area of the North Sea, if the water depths are different and so on. So you've only got a rough idea of the plant in question. You don't know. If you ask, is this on the provision of the plant in question, the answer is, well, no, it's on the provision of advice and data, which will enable me, give me choices and give me options and let me make a decision about where to carry the business, where to carry on the business.
Choices as to what exactly?
Well, about where to
There's
carry
a choice
on.
of location.
Or choice of location, yes.
And the choice of location then may determine the specifications of the
Yes,
equipment.
yes, it may. And that's why, in a sense, we don't dispute that if the test were looking back with hindsight, does it in some way inform a decision that informed a decision, then that kind of expenditure would be would be allowable. But of course, we don't say that's not the test. The test works and requires that you've got the plant in question in your sites. And for the very simple reason that it's describing the cost of its provision, its acquisition. My learned friend says in his case, and I should just deal with the point, that 4A doesn't contain a wholly and exclusively rule. And you see that in the rules for revenue deductions. And the point I'd make is you don't need that kind of rule with a test like this, because you need a wholly and exclusively rule for revenue deductions because it's a subjective purpose test. Now, actually, subjective purpose tests are very good for research and development type expenditure. The expenditure that helps you make decisions about what you want. Because what the revenue test says is, was this incurred? Were you motivated to incur this wholly and exclusively for the purposes of the trade? So you've got a subjective purpose test tied with a broader concept, the trade. Now, that's very good as a forward-looking test, which is useful to a taxpayer who, frankly, needs to know in advance of expending his money what the tax treatment is likely to be. That's a suitable test for that kind of expenditure. Because it's so broad, of course, it's then cut down by wholly and exclusively. And I say, well, you don't need that with this very different kind of test, where you're very sort of up close and personal with the acquisition of the plant. The word on is a much more limited test. So
you're saying that the wholly exclusively is pretty much built in because of the narrowness of the test and because of the requirement in B that the person's got to own it.
Yes, and also because the word on allows you to apportion, which in a sense is another way of showing that it's limited role. So if you have a contract and you spend 100 to buy an item of plant and a lease of the land, you'd put a portion, so only the amount on a just and reasonable basis attributable to the purchase of the plant would be allowable. It's a different kind of test, and its own limitations are built into it. Now, if I can address you on B. Now, B, so first of all, what I would say is, in the absence of B, there's absolutely nothing in those words, and in the context of a tax relief, that would suggest that you would apply this test with hindsight. It's a complete anathema in the context of a tax relief, because Parliament isn't handing out bonuses for good luck. You know, well, it turns out that with hindsight, it can be seen that you met this test, so here's some tax relief. If a tax relief is supposed to incentivise behaviour, and what it incentivises is expending money, not making claims, but expending money. So the taxpayer needs to know, and you can expect that Parliament will tell you what test it is you need to meet in a way that you can assess it.
But there could be expenditure which all comes within A, which is incurred over 2 accounting periods. If you bought the kit in year 1, you would want an allowance for it in year 1, or do you only get the allowance once it's installed? Suppose it was you bought it in year 1, you installed it in year 2, say. When do you get your first 18% allowance?
Well, I think you would have to own the plant as a result of incurring it. So it would have to be, you'd have to meet A and B. That's right. Yes, you'd have to meet A and B. So
yes,
A and B apply to make the claim, but there's also a question of, so in this case, I understand that, I think it was Gunfleet Sands, but that, or at least one of the turbines was brought into operation before they built the final 2 turbines. So you could see there that they may have been able to, so they'd have started their trade. But the general rule is that you'd have to meet both conditions before you can make a claim for the relief.
So are you saying that when they carry out these studies for which they're claiming the allowance, were they claiming that was qualifying capital expenditure?
Pre-trading expenditure. So they would have been incurring, in this particular case, they were incurring all the expenditure actually just because they had to.
Yes.
And then on a certain date, trading commences, and then they would, from then on, they could bring in the qualifying expenditure into the pool. Certainly for in a neutral example, the cost of the turbine. And then you start claiming once your traders commence.
I see.
But in another case, you could be doing this work while you're already trading, I suppose.
But this debate between retrospective and prospective, it seems to me that you ask the question when you acquire, when you own the plant and machinery. That's the point at which you ask yourself, what has been the expenditure on its provision? Because until you acquire it, there's no claim you can make. And there's no purpose in deferring the assessment of the expenditure to a date after acquisition.
But if you put yourself in the position of the trader...
Well, they need to know. People always take advice on what they will be allowed to claim.
They can only take advice. So the tax advisor has to know... Tax rules work on the basis that they are incentivising expenditure, so that if there's a test about the role or nature of the expenditure, Parliament, it can be assumed that it can be applied. It is to be applied on or prior to incurring the expenditure.
No, on incur. Well, no, surely neither of those on your acquisition of the plant and machinery. But I don't really see the difficulty here, because the whole point about having clear rules is that taxpayers can take advice. So if I do this, that and the other, will I be allowed to make a claim?
The advice from the taxpayer would be, if the Court of Appeal is right, we literally can't tell you whether this will qualify for relief until some of the expenditure in this case was incurred 6 years before the actual completion. We can't tell you at all whether you will meet subparagraph A. So you must incur this expenditure, which Parliament is...
That's not right, because what the tax advisor would be saying is, if you own the property, it will count.
Yeah, when you come to it.
But what you don't know is the measure of your cost that you can bring into the pool.
Well, I don't know. I would have thought the decisions that have been made so far will enable the advisor to say, well, on current authority, this, that and the other items will count. Well, of course, there's a lot of uncertainty, but that's inherent.
But this is a...
But what do you say the uncertainty is here, which is different from, all right, you ask Siemens to provide you with X number of turbines, they say, all right, you have to pay us 25% of the purchase cost now, although it's going to take us 2 years to do it. So then that you can say, well, yes, assuming everything goes according to plan, when you build that, when you acquire that turbine, you will be able, even though it's in an earlier time, you will be able to get the capex allowance for that 25%, because you will own it and that's part of the cost. So what is different between that kind of time spread and the time spread here? What is the additional uncertainty that you're...
It's the nature of the expenditure.
Right.
So everybody agrees that you get, and the companies have had this relief, or if they've claimed it, they can have it. Everyone agrees the companies get all the actual acquisition cost and installation and the purchase price of the turbines. And you can predict that. All you have to do in relation to that cost is plan to own it. Now that is something that is within the control of the taxpayer. You enter into the right kind of contract. You don't hire it, you don't borrow it, you plan to acquire title to it. And then there's commercial risks like being defrauded or Siemens going bust and you're not getting... They're commercial risks, and you take those into account as any business when you...
Look, take the... I mean, we're not looking at the very early scoping desktop things, but take the looking at the bird migration patterns and what the soil is. What is... Are you saying that when you do that, you don't know whether you're actually going to build a wind farm at all?
It's not that you don't know whether you're going to build a wind farm at all. It's just that words say it should be on the provision of the plant in question. And you don't at that point know what the plant in question is. It hasn't been... There is no design drawing even that is the plant in question.
And just to say it's all going to be a wind farm...
It's not good enough.
Not good enough.
That's not what those on the provision of. What is really happening here is that one is trying to sort of skew or turn on the provision of into a purpose test. Because it's done with the ultimate object of having our wind farm, then it's good enough. But actually the words are on the provision of the plant, and it's the plant in question, the plant you actually acquire. And it is extraordinary in the context of tax relief, and I'm sorry, I still haven't got to B and its purpose, but if if the tax advisor cannot say to the taxpayer, I can't tell you whether this expenditure is of the right nature to fall within A until we see what you actually build, and then I can track back with hindsight, seeing whether it can be described as informing the provision of that particular item. And that is an extraordinary, it's a very difficult test for an accountant to, or anyone to apply. I mean, it's easy in this case because we had all the findings of the first tier tribunal. Very lengthy decision with lots of detail about what all of these studies did and what the effect of them was. And in some of the studies, they might be said to inform because there's a mitigation that says something relevant to. But you might very equally have had a study where they say there's no mitigations required, you didn't even need this study. But you've got to incur the expenditure.
Well, let's say there are no archaeological wrecks anywhere near here. There's no unexploded ordnance. We've looked. That'll be £20,000, please. And the question is whether that is then on the provision of the wind farm.
Well, and I would say no. That the wind farm in question, no. And why should it be? But the poor tax advisor and taxpayer who wants to know when he's incurring the expenditure, is it of the right kind that it will meet A? All the tax advisor can properly say is, I can't tell you now because I have to trace back with hindsight to see whether it meets this word informs the design. And then everyone says, well, what does that mean? And in the real world, everyone says, well, I'm not really sure. We'll try and deduce it from the facts.
It seems to me there are 2 points there. One is whether it's a hindsight perspective issue. The other is the clarity of the test.
Yes.
If we all knew what inform meant, there's no problem for the tax advisor.
But hindsight is a problem for the taxpayer in the real world. And bearing in mind, Parliament is intending to incentivise the incurring of expenditure. And that means you give a test that you can apply when you're incurring it. That's really, I would say, a kind of fundamental. And I
don't think anybody's disagreeing with that. It's just, given that you have to own the plant, it seems to me that the Court of Appeal is saying, well, there's no problem about applying that with the benefit of hindsight, because the ownership, that has to be a given. But as that's the starting point, provided the expenditure that you're now going to incur over these years can, once you've owned the property, if you own that property, be regarded as informed by, or whatever the test is, then it's going to be okay. That's the advice.
But that means the taxpayer does not know. He does not know on the day he has to spend £10 million.
Well, it does. If it informs.
With hindsight, that means you need to probably look at what advice is actually given.
Yes, but I mean, I think informs would cover both a survey which tells you there's no unexploded ordnance, and one that tells you, yes, there are 3 big bombs there, you better shift your thing to the side a bit so as not to disturb them. But I mean, I don't think that anybody's arguing that the ability to get an allowance for that, the cost of that study, turns on whether it has a nil return or a positive return, are they?
But then that really is turning the words on the provision of into an incredibly wide perspective, incredibly wide test. And suddenly we've lost our concept of this is about depreciation of the wear and tear of the particular asset. And really, one way of reading the Court of Appeal's decision is, well, forget hindsight. Anything that you do as a step towards the provision of what you ultimately end up with will be allowable. And we know from Benedetto that that's not right, because that would allow in finance costs, and we know that they're not allowable. because they were, for that particular taxpayer, a necessary step to acquiring the plant. Can I just take you briefly to 2 cases just to...
Are you at some point taking us to B?
I was going to do that
well,
now.
okay, right, I thought you...
So, B is the person incurring the expenditure owns the plant and machinery as a result of incurring it. Now, that fits absolutely with what we say the statutory policy is, because it's about why should you get a depreciation relief if you don't own the asset? Because it's that asset which is falling in value and which the legislation is trying to, if you like, isolate out the loss in value of that plant. That's the relief. So if you don't actually own the asset, why should you get the relief for its loss in value due to wear and tear? So that is why B is there. And that's it. And it doesn't infect or have anything to do with A. They're 2 different kinds of...
Although, this may not matter at all, but there is this link that B says the person incurring the expenditure. Now, that is the capital expenditure on the provision of plant or machinery referred to in A.
Well, I think, those behind me might not like the word, but I think there's a fudge in B, and that's clear from in Mossat, which is that some part of the expenditure has to lead to, because obviously transport and installation doesn't meet that.
Well, no, you're perhaps ahead of me, but is it right to say that the expenditure in B refers back to the capital expenditure in A?
Yes, but it's not necessary that all of it is.
Sorry, I'm not.
So,
okay.
if you pay 100 to the manufacturer to buy the turbine,
yes,
and then you pay someone else for the transport and delivery,
yes,
and let's say that has no impact on whether you own it or not. A captures all of it, the transport and delivery, but it's enough that the 100. It's enough that the 100 leads to ownership. I see. So the idea of B is just to connect the person incurring the expenditure with the plant in question.
Well, as a matter of language, B requires that the expenditure or the plant and machinery is owned, that's the word, as a result of incurring the expenditure. So that's presumably regarded as using different words to say the same thing as in A, that it's expenditure on the provision of plant and machinery. Or are you saying they're different?
Well, they do different jobs, and so B is all about the plant coming to belong to you.
So do you say that we should read B, or maybe it's in the authorities already, that it's the person incurring the expenditure owns the plant or machinery as a result of incurring it or part of it?
Yes, because the parasitical type of expenditure
I see.
Certainly would be included.
So it should be, so it means owns the plant or machinery as a result of incurring at least some of the capital expenditure in A.
Yes, I suppose. Yes, thank you.
Right.
And there are 2 cases which, if I could take you to the case of Guthrie quickly, at 615 of the bundle. So this was a case about Section 15 of the 1945 Act, and it was to do with annual initial allowances. Sorry. Now it seems that, and you can see at the bottom there, you have capital expenditure on the provision of machinery or plant for the purpose of the trade, and so those words are the same. Now, what seems to have happened is the draftsman didn't include a belonging requirement, but it was in what would now be the writing down allowances, so the annual allowances they were called for wear and tear. But here, so these words were missing. And what happened was that the taxpayer, he entered into a contract to buy a motor car, and the garage, in fact, defrauded him. They were already insolvent. He'd already, I think, agreed to sell the car to somebody else. And this poor taxpayer got no car, and he lost his money. So he'd expended the money on the purchase of the motor car, but he hadn't managed, the car didn't come to be owned by him. And the Special Commissioner's finding is at 6, and it's very shortly recorded. They say, we, the Commissioners who heard the appeal, were of the opinion the natural meaning of the word on the provision of following the words where a person carrying on a trade incurs capital expenditure was in order to provide, and we were unable to see that other provisions in the Act to which we were referred required those words to be given a different meaning. We don't know what they were and whether they were the annual allowance where the words belonging were used. Now, the Court of Session, that begins at 617.
So they allowed him the...
They allowed him the relief. The Court of Session, if I can pick it up at the bottom of 617, the words of the section. So the words of the section which fall to be construed confer the right to an initial allowance upon a person carrying on a trade who incurs capital expenditure on the provision of machinery or plant for the purpose of the trade. There's much to be said in favour of both rival interpretations. So the Crown was saying you have to imply in an ownership requirement, and the taxpayer was saying, no, you don't. The question is whether the emphasis falls to be laid upon the incurring of the specified expenditure or on the provision of the plant. In other words, whether it's only claimable if the plant on which the expenditure is incurred actually materialises. And then he says, well, I agree with the Special Commissioners. Reading the section in its context, it seems to me to be a legitimate inference, one leading purpose of the statute, passed as it was about the conclusion of hostilities, was to lighten the burden of taxation on the industrial community by admitting as deductions against taxable profits items not admissible under the income tax law. And he says not necessarily any purpose. Then he says the mechanism uniformly adopted is to reduce the burden of taxation by initial allowances or allowances for wear and tear or obsolescence or the like. And then picking it up again a few sentences below, against such a background and in such a statutory context, it is, I think, significant that in section 15 and other parallel sections, the direction is not that the benefit should be claimable by the person who provides the prescribed improvement, but by the person who incurs capital expenditure on its provision. Where there's been bona fide expenditure of capital for an approved purpose, the commissions were justified in concluding their concern with, and this is the sort of ratio of it, the fact and object of the expenditure, and not the subsidiary question whether the money was well spent or ill spent. Bona fides always assumed, or whether the intended object was or what was not actually realised. And what's fundamentally being described here is A, doing its job. So they use the word object here. It's clear in Benedetto it doesn't mean ultimate object in a purposive sense. It means immediate object. So what do you get under the agreement, in effect? And it's looking prospectively, when you incur the expenditure, the object of that expenditure under that transaction. And here, it was very clearly the motor car. Now, because the motor car was plant, it was the plant in question. There's no doubt about what it was. And it was all bona fides and so on. The Court of Session say, you fall within the meaning of the words of A. So it doesn't matter whether or not the other party to the contract delivered. And that's what sort of well spent or ill spent means. It doesn't matter that you never got the car. And then they finish, various cases were figured in argument which might lead to results unfortunate to either the taxpayer or the revenue. And then they say the cure is to be found in supplementary legislation rather than the efforts of the court to deduce intentions of Parliament. So what happens then is in I think this case takes at least till the sort of early 1950s to come to court. 1957, Parliament enacts and it changes the law, and it introduces the belonging requirement into the initial allowances, matching the wear and tear allowances. But the analysis of A and how you read it and its job...
So they legislated to reverse the result of this case?
Yes. So but what that focus of A being looking at the person incurring the expenditure and the immediate object of that expenditure in the transaction, if you like, from their perspective, that doesn't change. That's confirmed in my submission by Inmarsat in the Court of Appeal, which one finds at 619, up straight after. That's the head note. So this was an unusual case because the taxpayer was the successor to IMSO. So you had a position where the bank had actually spent the money acquiring the plant and it belonged to the bank. IMSO spent the money on launch costs, and everybody agreed that launch costs were like transport and installation. They were just part of the act of provision for a satellite. And then this, Inmarsat Global, was the successor to IMSO, and it wanted to claim allowances for the launch costs that had been incurred by IMSO. So one of the questions, they were relying on a sort of gluing together lots of deeming rules, but one of the questions was, can you satisfy A without satisfying B at all? And the answer of the Court of Appeal is yes, because A is concerned with the function and the role of the expenditure in relation to the provision, and B is doing something else. B is asking then, and have you come to own it? And that's at paragraph 66 of the decision. And
we've got a page for it.
It's page 642. So the arguments for the taxpayer are at actually 64, and you've got the submission is made is that the nature of the expenditure, Mr. Prosser said, is the same whether you owe whoever incurs it. Expenditure on the provision of plant is not limited to purchase costs, regardless of whether the money is spent by the owner. There's a separate belonging. When considering whether something involved in the provision of plant, the focus is on the effect or function of the expenditure, what it does in connection with the provision, not on the identity. And then at 66, the Court of Appeal says, I don't see the need for expenditure to be on the provision of, as itself imposing any requirement, it should lead towards ownership. And so the upshot is that A was a test that could be satisfied, even though the taxpayer had never come to own and wasn't deemed to own the satellite.
So could they, but were they then allowed the expenditure?
No, because they were relying on gluing two deeming provisions. Right. But the Court of Appeal find that on that particular argument, which was one of the building blocks in the taxpayer's argument, that yes, they did satisfy A. The problem was that the person who incurred the expenditure didn't own it. So, but the point of principle is that...
But if the person who bought the satellite, had paid IMSO to launch it...
If that had been a launch cost, then yes, they could have...
They could have deducted it, but it was because IMSO paid that, presumably to be recouped from whatever the satellite did, and had not charged it on to the person who owns it.
Yes, it may be they could have done it so that somebody could have claimed it. I'm not sure. But in the event, INMSO didn't claim it, maybe because they were a government agency, or I'm not sure, but the successor, the person who started making trading profits, who succeeded to the trade. Anyway, the upshot was that no one got the costs of launching the satellite, even though everyone agreed.
I think you were about to tell us what the point of principle was.
So, well, it's just supporting the point I make, which is that A and B are doing these two different jobs, and they don't bleed into each other. And you can satisfy A without ever owning the plant. So as long as there is, if you can identify the plant in question, you can satisfy A. And belonging has got absolutely nothing to do with A. And I just say that's supportive of my submission, which is that there are these two conditions to be able to claim capital allowances. The first one is qualitative. It's about the kind of expenditure you're incurring. And taxpayers are entitled to be able to assess, at the time they incur it, whether it is of the right kind. And then as to B, it's a completely different kind of test. It's about belonging, legal title. You plan for it. The business can plan for it. It knows that if in the end it doesn't acquire title, it won't claim any allowances. But that's a completely different point. That's about commercial risk and the risk of you changing your mind. It's in your control. Completely different question to being so-called, if you like, incentivized to incur expenditure of a certain kind without the ability to test what the nature of that expenditure is by reference to what Parliament wanted you to expend it on. And I just say it's absolutely fundamental. It's really surprising to find hindsight written into a tax relief when you're looking at the quality of the expenditure. And it's not surprising to have other conditions in. There are lots of conditions for making claims. To actually make the administrative claim, there are lots of things you might have to do, of course, but...
I see.
Yeah.
So is your point that insofar as the Court of Appeal said, well, hindsight is written into this because they have to ultimately own it, and therefore the test does involve looking backwards and see what led to them owning it. You say, no, that's only a point on B. A is a qualitative test that doesn't have any hindsight element into it, and so the hindsight element within B does not affect the application of the test in A because they're separate. So.
And in a sense, there's no hindsight in B. You just ask, do I own it? But that, I don't need, that's probably overcomplicating it. But yes. Now, perhaps if I could just turn to I promised, the Court of Appeal on the statutory policy, if you like, which is at 70. And then after doing this, I will turn straight to Barclaycard and Benedetto, because they are the two important cases. So the Court of Appeal at paragraph 70 is at 174 of the hearing bundle. And so the Court of Appeal wasn't keen on the words strictly and narrowly. Well, I could say less liberal or more liberal, but the Court then says, nor is it evident that Parliament would have intended that approach. So a kind of...
I'm sorry, I missed which paragraph?
70. So
70.
just picking up the very last sentence or last line of page 174. So I'll show you this just in a moment, but the Court of Appeal treat Barclaycard and Benedetto as an invitation to expand the relief. And I say that's a complete misreading of the cases. But so they take their view on Berkeley, Cullen, Benedetto, and then they say, nor is it evident Parliament would have intended that approach. In other words, to limit it to the acquisition cost and similar. So if it's a matter of ordinary language, a taxpayer incurs expenditure on the provision of plant from which potentially it will earn taxable profits. It's not obvious Parliament should not have wished all such expenditure to be eligible for capital allowances. Now, I just say that's just far too high a level as a statement of policy.
Well, it's all posited on the very question we have to decide, which is whether the expenditure is incurred on the provision of plant. So it doesn't actually advance the debate, does it?
No.
I mean, Parliament clearly did intend there to be an allowance if the expenditure was on the provision of plant.
But it's also saying, why should there be, you can get all your revenue expenditure as long as you can show it's wholly and exclusively, so why shouldn't you be able to get all your capital expenditure as well?
No.
To which the answer is, well, Parliament does not allow you to get all.
I mean, I read it as just referring to the language of the section, because in quotes, if as a matter of ordinary language a taxpayer incurs expenditure on the provision of plant, well, that's the statutory test. Then, well, of course, Parliament intended them to have an allowance, because that's the test. So, I mean, I quibble with this because I just don't think it advances the debate at all. I don't think he's actually saying anything about liberality or illiberality.
Yes. And yet it is put forward as a, nor is it evident that Parliament would have wanted to adopt the narrow approach.
Sentence two.
Sentence two.
And then he goes on that yes. This is Lord Justice.
Well, yes. Okay.
It says it must commonly be the case that the expenditure incurred on the provision of plant will comprise no more than the purchase price and installation costs. Very often, the provision of plant will doubtless involve buying something off the shelf. Where, however, the plant is bespoke, it seems to me the words on provision of read naturally. And I quibble with that because we've got nothing here. All we've had on policy is, I don't see why Parliament wouldn't allow it to you if you're going to make taxable profits out of using it. But so nothing about the purpose of the relief itself would extend to costs incurred in designing the plant. Now, the other quibble I have with that is that actually reading that sentence of the judgment naturally, that seems to me to describe, say, the final design drawing that you're making real by the fabrication. Because design is such a weasel word.
Well, design is both a noun and a verb. And I think you're saying insofar as there is a design, the drawings, a noun, then that the cost of producing that may well be
on the provision of...
On the provision, right, but designing that design, you can use both the verb and the noun,
on the provision
or
of
arriving at that design, takes it much further back, if one could.
Yes, and a criticism I make of the judgment is then when the judgment moves on through 72 and 73 and ends up at 76, which is where they set out the test. Design morphs, it becomes a bigger and bigger. So you begin with this, well, I don't see any problem as a matter of ordinary English language of saying that the cost of designing the actual plant in question would be allowable. But then it morphs into anything that informs the design with hindsight. So there's been a slippage in the reasoning. There's certainly not clear that anything said by the end of paragraph, or the middle of paragraph 71, supports anything that follows by way of the conclusion. And
so, just to be clear, you aren't necessarily quibbling with the sentence would extend to costs incurred in designing the plant. I think this is back to a discussion we had right at the start. But you would say the word design there is the final designs of the actual plant?
yes, because always we're saying it's the expenditure that's right up and proximate to the plant in question. And it's a very difficult thing to say in the abstract, and we don't have the findings of fact about the very, very final stages. So these questions are difficult when...
Is your point on that third sentence, it's just too vague? What is meant by costs incurred in designing the plant? I mean, what happens is that a taxpayer makes a claim for a particular item of expenditure, and at that point you can ask whether it is for the provision of the plant and equipment. It all depends on what Lord Justice Newey means by costs incurred in designing the plant. And then you can ask a series of questions, one of which is the cost of the final drawing. Yeah. It may not be restricted to the cost of the final drawing. Yeah. But is that the point? Your difficulty with that sentence?
The difficulty of the sentence is that the design could mean anything. And in the end, you have to go back to the detail, exactly the detailed expenditure, and say, what actually are we talking about?
But if you just went to somebody and said, design me a wind farm, please, and then I will buy it, right? And they charge you £1 million, and they give you the picture of what each turbine's going to look like, how many blades it's got, and they charge you £1 million. Within that £1 million is a mixture of, I think, of things that you would say are allowable and things which are not allowable, because in order to come up with those drawings for which they charge you, they've, let's assume, done the benthos studies and found the archaeological wrecks and decided it's got to be painted yellow or whatever. And that has all informed that for which you are paying a lump sum, and then you take that to Siemens and say, well, give us this. But is there a way in practice that you break down that £1 million that's claimed by the subsequent owner of the wind farm to say, well, those bits are sufficiently close, but those bits that they charged you for that they did are not sufficiently close?
The difficulty with the example is when you look at the detail of the facts is that the early studies go to whether you get regulatory consent to do it at all. So it's highly unlikely you ever have this contract, which is just design me the wind farm and then make it. And then actually what Orsted want is, by reference to how much money it wants to make, it makes choices about what kind of plant it wants. So it's very unreal, if you like, as an example.
But just looking at that in theory in a different industry,
if you bought... The thing is, you'd probably be buying intellectual property. I suppose if you bought a design from a... It's difficult. You have to have the... I mean,
are there ever occasions where somebody claims a lump sum capital expenditure, which they say was on the provision of the plant, and you actually break down that price that they paid and allow some of it as being close enough but disallow?
I think if it were partly on the provision of plant and partly on the provision of something else, then you would apportion. So if building in the regulation consents and so on, there was a kind of a pause in the contract. So there's a preliminary work, and then you have to get approval. And actually, you might not be able to go ahead at all because you don't get the regulatory consents. Then that would be a natural split. But you have to be able to do a just and reasonable apportionment. So you say, this is on the provision of the plant, and this, and looking at this contract, there are a number of different things being provided. And that will turn on what the words mean.
And there's no authorities at all on designs in this sort of context?
No. My learned friend relies on McVeigh, but it's absolutely, or every court below has regarded it as not relevant or helpful, and I now
That's
will repeat
the printing blocks for the wallpaper.
Yeah, and I'll repeat that submission.
I think that because of his reference to the views expressed in the HMRC manual, Lord Justice Newey in paragraph 71 is actually speaking quite narrowly, because he quotes from the Capital Allowances Manual of paragraph 49, and they're sort of professional costs and so on, which only qualify for allowances if they relate directly to the acquisition, transport and installation of the plant and or machinery. So that's pretty narrow, I think. And he says that that's what he just says chimes with it. So I think he's envisaging there, having now looked at that reference, to something pretty narrow, which wouldn't extend as far as the expenditure in issue in this case.
Well, I would...
At that point, obviously, he goes on to develop it further.
Yes, and my submission, that's right. And it's only in that sense that you might get anywhere close to say that the statutory words might cover a design cost or the drawing and so on. And what we say about the manuals and professional fees is that, I mean, one of the cases, Berkeley Curl is building a dry dock, and one would imagine that in the course of the actual construction, you will have professionals involved checking that things are being built to the right, the instructions, so that the gear, if you like, that you've bought to be fabricated, the gates and so on, will fit as intended. But just because building professional fees are considered allowable doesn't mean that anyone's contemplating these sorts of costs. Could I turn to Berkeley Curl and Benedetto, because I'm just conscious of the time. Yeah. Yes. So the Court of Appeal's approach to Berkeley Curl and Benedetto is that they invite an expansive reading of the test. That's their fundamental point. And in my submission, that there's no support for that. And the Court of Appeal at paragraph 63 also distinguishes, or rather sidelines, Berkeley Curl on the basis that there was, as a matter of fact, a very strong and close nexus between the expenditure in issue and the provision of the dry dock. So Berkeley Curl itself starts at page 521 of the bundle. And I should say the companies also rely on Berkeley Curl, and they read the majority judgments as almost setting up is it a necessary preliminary to, in the sense of is it a necessary step towards, and I think probably viewed with hindsight, because otherwise it doesn't get them home. Now, if I could begin with Lord Reed at page 522. So that just sets out the background. So the respondents installed a new dry dock at their shipyard in Elderslie, and the costs in issue were the preliminary excavation cost. So the cost of excavating the basin that would create the dry dock, because obviously it had to be beneath the water table so that the water would move in of its own accord. And also the cost of lining the basin with concrete. And so they were large sums in issue.
So then it's below the waterline, the ship sails into the dry dock, then you close some kind of gates, or
and then you pump out the water,
and then the ship is in dry dock. Yeah.
Now, the case primarily was about whether the dry dock as a whole was plant. Because if it was plant rather than premises in which various little bits and pieces of plant were installed, then that extended the scope of the relief you could get, because you're now incurring expenditure on the provision of plant rather than on the provision of premises. So if excavating the basin was just improving or creating the premises for the plant used in the business, then everyone would agree that it wouldn't be allowable. So the first question was the dry dock itself plant? And the answer to that is yes, and quite a lot of the judgment is taken up with that. And it's because it functioned as plant in the trade. And just at the bottom of 522, you get an important, I mean, the facts in Berkeley Curl are important, It's not a reason to dismiss the case as irrelevant. So I can summarise the facts found by the commissioners. The dock had to be made at the right level adjacent to the Clyde. 200,000 tonnes of earth had to be removed to make room for it. So that's the costing issue. The walls and bottom had to be strong and impervious to water. So then it had to be lined with concrete. It had to be used. And that's important because when Lord Reid, in particular, appears to gloss the test as was it necessary for or a necessary preliminary, I say he's not extending the words on the provision off. He's not inviting an expansive test. He's actually just describing the expenditure that's there in issue. And this case is almost as important for what it doesn't do, the approach that isn't taken, as for what it does do. It treats it as a difficult case, even though what we're talking about is making room for the dry dock, excavating the basin and lining it with concrete. So page 526, starting at B, we've got the issue, whether the cost of excavation necessary to make room for plants part of the cost. 279 therefore mirrors our words. They haven't yet added in the belonging requirement, as it happens. So the question is whether, if the dock is plant, the cost of making room for it is expenditure on the provision of the plant for the purposes of the trade of the dock owner. In my view, this can include more than the cost of the plant itself. Now, that's relied upon by the Court of Appeal and the companies. Because but then I say, but look at the qualification. Because plant can't be said to have been provided for the purposes of the trade until it's installed. And that's why these items like installation and so on are allowable. A cooker isn't installed if you can't switch, it's not provided if you can't switch it on. It's not usable at some basic level. Until then, it's no use for the purpose of the trade. This plant and this dock could not even be made until the necessary excavating has been done. Now, contrary to the court below and to the company's case, that is not setting up is it necessary for test. What's being described there is the facts, the close and proximate nexus between the expenditure and the act of provision. And really they're saying it was actually the act of provision.
Yes, I mean, he's first sentence there, if the dock is plant, is the cost of making room for it. But the excavation is not making room for the plant, it is the plant.
Yeah.
The room is what the ship sails into.
And that's the point made by Lord Justice Lewis in the Cheshire case, and the references in our written case.
That's right, is it? That I thought the plant was the dry dock, but the costs of excavation are to enable that dry dock to be installed.
So
the costs of excavation are not themselves part of... The excavation is not part of the plant.
The lotteries actually deal with it in the alternative.
Oh, do they?
But
right,
I mean, perhaps it's too... it's not sufficiently a technical approach as a lawyer rather than an engineer.
Well, the way that Lord Reid puts it is, if the dock is plant, the cost of making room for it is expenditure on the provision of the plant. So that's why I thought...
Oh, yes. But I would agree, but it's in a context where, in a very real sense, making room for it creates the...
This is all focused on this particular item of plant.
Yeah.
This dry dock.
Yes.
Yeah.
The plant in question.
Yeah.
Even though, of course, it does seem in 279, we don't seem to have that belonging requirement. But I'm not making... So then moving down, just at the end, so just by E, if the cost of the provision of the plant can include more than the cost of the plant itself, I don't see how expenditure which must be incurred before the plant can be provided can be too remote. Now that then is taken by the companies of the Court of Appeal as this invitation to extend the relief. And I say that just in context, that sentence doesn't invite or allow that. And that is really just a fair reading of this judgment. And then my learned friend also relies on the paragraph starting at G. Here the word, so this is in relation to deeming provision. So this section 300, it turns into section 66, which is considered in the J.D. Wetherspoon case. And what that deeming rule says, it essentially deals with consequential expenditure. So if you have to alter land in consequence of having plant provided, those consequential costs aren't allowable. They're not on the provision of plant. So you have a deeming rule. And so long as it meets the words of the deeming rule, they must be incidental to the installation of the plant, then the expenditure is allowable. So this is relied on in the case by one of the parties. And Lord Reid says, here the word used is incidental to the installation of the plant. Incidental is a wider word than necessary. In my view, expenditure necessary for the installation of plant is already covered by 279, so that's the initial allowances are section 11.4a. Now, my submission, that's not, again, setting up or saying anything that's necessary for, especially if it can only be seen to be necessary for with hindsight, anything that's necessary for the provision must be covered. And Benedetto is a clear example of that, because finance costs for that taxpayer might have been necessary, not allowable, not on the provision. He's simply then describing the facts that we've seen described above. And he goes on to say, which puts it in context, it may be the exigencies of the trade require that when new machinery or plant is installed in existing buildings, more that shall be done than mere installation. So we're in a context or a world where the relief is being narrowly viewed. It's mere installation. It's not necessary or even incident in the sense of incidental costs required as a result of it's only mere installation that's allowed.
But incidental is not usually used as the opposite of necessary. And the argument that he was meeting was, well, there's a separate deeming provision for incidental costs, therefore the excavation can't be in 279, because then you would, if 279 was that broad, you wouldn't need 300. That was the argument he was meeting, I think. But then he seems to answer it by contrasting incidental with necessary, which is not, they're not usually regarded as.
And of course, this case wasn't about the deeming rule.
No.
But what you come back to is that he's still saying it's only mere installation that's being regarded as necessary. So he's keeping it narrow still, I say. So I say so far no support on a fair reading for an expansive reading. Lord Guest begins at 530 and at 531 at the bottom at H. This is interesting just because it again sets all of the analysis in context because it's about the facts. He says at H, it's unrealistic in my view to consider the concrete work in isolation from the rest of the dry dock. It's the level of the bottom of the basin in conjunction with the river level that enables the function of the dry docking to be performed. To effect this purpose, excavation and concrete work were necessary. So we're always with necessary talking about part and parcel of the act of provision. And on HMRC's test, that's squarely within the relief. And then over the page at 532 at F, it only remains to deal with the second point raised by the appellants, that even if the concrete work were plant, the cost of excavation, so this is extending the meaning of the word plant to include the concrete lining, but then saying still making room for it isn't, strictly speaking, the plant. The Commission has upheld the contention of the revenue on this point, their view being expenditure was too remote from the provision of the dry dock. In my view, they were wrong in excluding this expenditure. The excavation was a necessary preliminary to the construction of the dry dock. But, of course, we're talking about the facts of the case where you're literally, in truth, making the dry dock. So, again, those are not words of extension. And he says provision must cover something more than the actual supply. In this case, it includes the excavation of the hole in which the concrete is laid. But I say that doesn't open up Section 11 to the Court of Appeal's interpretation. has to be read in context. And then Lord Donovan, the third of the majority, starts at 536. And again, in his judgment at the start, G to H, you see a description of the nature of the facts in front of them and the close and proximity or the nexus between the expenditure and the act of provision. And then at H on 537, as regard the cost of the necessary excavation, I think this comes within the words expenditure on the provision of plant, machinery or plant. At some point, maybe in 1990, they switched machinery or plant, but anyway. In section 279, again regarding the dry dock as a whole, similar expenditure incurred in relation to building or structures now regarded as expenditure on the construction of such building. Now, my learned friend relies on that to say, oh, well, actually, maybe constructing a building has a wider meaning, so we can include anything that might be covered by the construction of a building in on the provision of. Well, that's going much too far on what is being said here. What we're describing is, in effect, the installing of the foundations in the land. And it's not surprising that digging the foundations is regarded as on the construction of the building or structure. I mean, it's not, again, it is not an invitation to extend the text. So that's Berkeley Curl. So as I say, no support for an expansive reading. And it is interesting that they're not treating it as an easy case that, oh, because everything is allowable, that informs or is to do with or might be a proper business expenditure en route to, it must be allowable. That's not it by any means.
So you say if they were applying the Court of Appeal test, everyone would have agreed that it was.
And if they'd known that that was the test for design and development, then they would know that this was a very, very expansive test. So, surely it would be a very easy question to say that, well, surely the cost of excavating the basin must be allowed. So the other important case is Benedetto. And again, it's relied on by the Court of Appeal and my learned friend as an invitation to extend or expand the meaning of the words. And there's also, I think my learned friend wants to try and distinguish it, and I think the Court of Appeal does too, it's a niche case about finance costs. It's got no real relevance to a case like ours where we're trying to construe the general rule. And I say, well, that's very clearly not the right approach. I'd like to begin with the High Court decision. So this then leapfrogged to the House of Lords because my learned friend makes reference to the decision of Mr. Justice Brightman. So that begins at 569. And there's the special commissioners. The case stated is set out at 570, just by F. And the key facts that were found was that the taxpayer company, it entered into an agreement, this is just below F. It placed in 1969 a contract with the Upper Clyde Shipbuilding Limited for the building of an oil drilling rig. So that's the plant in question. Entered into a contract to have it built. And then it was delivered and named the Ocean Tide, and then he started to trade in 1971. And the trade was actually hiring out the Ocean Tide on time charter. Then he made up his accounts, and just above H, it says during 1969, so the contract's there, they know what, they've entered into the contract to have this, the plant in question.
I'm sorry, you're reading from page...
No, sorry, I was just summarising. They've entered into the contract. It says, during 1969, arrangements, this is just a date, were made for the taxpayer company to obtain the following loans to finance the construction.
I'm sorry, but you're now reading...
That's just by H.
570.
Of 570.
I've said gone back to 570, isn't it?
Yes.
So the loans were entered into knowing what the planting question was. So this isn't a case that tests, if you like, expenditure incurred before you know what the planting question is. And then there's lots of findings about the borrowing, and in fact the borrowing was used to make payment under the contract. And there's a finding of fact, and it's common ground, that the correct accounting treatment was to add the finance costs to the cost of the oil rig in the accounts. So the depreciation would be added to that. And everyone agreed that was the correct gap, or whatever it then was, accounting. And the taxpayer company's case is summarised at 572. And just above B, and he repeats this case in the House of Lords, it was contended on behalf of the taxpayer company if money was borrowed at interest specifically to finance a purchase and having been borrowed was devoted wholly to the making of the purchase, then it was part of the cost of the purchase of the subject matter of the purchase. And then at 6, we've got the Inspector of Taxes, and they say, A, that the sums in question were incurred on the provision of finance capital and not on the provision of machinery and plant. There was a clear distinction in law and practice between the cost of raising initial finance and expenditure on fixed or current assets. In this case, the provision of finance may have been an essential preliminary, but was not directly related to the provision and installation of the ocean tide. So there you do see the word directly related, and it is picked up, I think, by Lord Wilberforce in the House of Lords, but it's used, it's something different from an essential preliminary. What it's saying is you may have needed, in the real world, to have incurred this interest expense, and had you not, you would not have ever have got that oil rig. That might be the facts. But it's still not directly related to the provision and installation. So that's the Crown's case. So directly related is a narrow test. And then Mr. Justice Brightman, there's a further summary of the counsel for the Crown's arguments at B at 573. And we've got counsel for the Crown submitted there was a vital difference between expenditure on the provision of what he called finance capital and on the provision of machinery or plant. Although the former was obviously connected with the latter, each was a separate transaction related to a separate subject matter, and he sought some guidance for his views from Guthrie and Berkeley Curl. And Mr. Justice Brightman says, this is the Special Commissioners, they say it's a short point, and then just above D, they say, having considered the facts and arguments, we've reached the conclusion the appeal should not be upheld. Seems to us the provision of finance was a preliminary and separate matter, rather than an incidental part of the purchase or provision of the drilling rig. It's true that it was part of the overall outlay incurred by the taxpayer. Well, of course, that's true of all the expenditure in our case. But whereas the purchase price of the ocean tide clearly fell within the statutory words as expenditure on the provision of the drilling rig, the costs incidental to financing were, in our view, one material stage removed from the provision of the rig, and represented money spent on providing the means to acquire the rig and not the provision itself. And we say there's a similar sort of disjunct in our case, which is there's the means to provide yourself with the provision of the wind farm, and then there's the actual provision of the wind farm itself. And that sort of feeds back to my initial submissions about the overarching statutory policy or purpose of the relief. So the arguments are then repeated, and the decision of Mr. Justice Brightman is at 574, and he summarises the facts at the start of his judgment, C to H, and then the taxpayer company submissions begin at I. And again, he makes the point that the loan is specifically and exclusively for the purchase of the the machinery and plant, and the borrowed funds were wholly devoted to it. So he's trying to carve out, if you like, a special rule for interest costs. He's saying they're so intimately connected with the actual provision that surely they must be allowable. And then he says at the top of 575, one looks to the object of raising the money. And what he means there, and that's clear from Mr. Justice Brightman's judgment, is the ultimate object, sort of why. So that's a misreading of Guthrie. And then he says, secondly, this is a general principle that applies to capital allowances. And then he relies then on Guthrie. And at E, there's a further summary of the taxpayer's case. That decision was relied on by the taxpayer as an indication that the question I ought to ask myself is, what object did the taxpayer have in view in incurring the expenditure in question? So I should say that everybody here is very much looking at a prospective test, perfectly consistent with, I'm the taxpayer and I need to know today, before I incur the expenditure, what kind of expenditure meets.
Well, E is a purpose test.
Well, no,
that
this
was
is the
what the
taxpayer's
taxpayer was
argument.
arguing.
Yes.
What
So,
object?
so he says, what object did the taxpayer have in view? Here it was submitted the only object which the taxpayer had in view. So what the ultimate object was the acquisition of the oil drilling rig. And then over the page, this is just important to note to understand the House of Lords decision under B. Counts for the taxpayer was careful not to place his case on too broad a base. And I think that's really accepted by Mr. Justice Brightman as correct. So he submitted there were 4 limitations. And he says, he sets up a why. He says, what's the object of the expenditure? Why was the commitment secured? Why was the money borrowed? And then he says it has to be established it's not too remote. And he says, to take the case of a dry dock, there may be many incidental expenses which might fall to be considered. For example, not only the cost of designing the dry dock, but probably also legal and other costs. And there might be all sorts of other incidental expenditure incurred in a broad sense in connection with the provision, some being of the closest proximity, such as the drawing of plans, and some much more remote. It would therefore often be necessary to apply a remoteness test. And then his third and fourth are to try and say, well, if the accountants let you have it, you should be allowed to have it. And the Crown's answer, which I'll just summarise at G to I, although it is important to read the whole, is that what they say is, and just actually at H, that the taxpayer's trying to write in the words on or in connection with. And then the revenue say, well, if that's right, then, and following through the logic of the taxpayer's argument, so that interest costs are allowable, why shouldn't other costs of raising finance be allowable? And it seems to be common ground for Mr. Justice Brightman, and I think again in the House of Lords, that other forms of finance would not be allowable. So the argument of the taxpayer is, okay, well, no one's suggesting that you could get, if you had a raised capital by shares or debentures or so on, that those costs would be allowable as on the provision of the plant. But interest is so special, it's so intimately connected with the capital cost of the plant that it must be allowable. And the Crown is saying you can't carve out exceptions for certain kinds of expenditure. Either it's all in, and everyone agrees it's not, or none of it is. Now, that's important because the Court of Appeal and my learned friend, they rely on a reliance in the House of Lords on this principle that, unless it's clear, taxpayers in objectively similar situations should receive a similar tax treatment. That is not being set up, as my learned friend would like it to be, as a justification for actually writing in or a carve-out or carving out a special relief for example, design and development costs or the costs of the studies in this case. The principle is being used to reject the taxpayer's argument, which is, in fact, it's moves directly against my learned friend's case on this. The principle is being used to reject a special carve-out for interest costs. And inherent in all that is that this is a relatively narrow or not a liberal test, if you like. The Court Civil didn't like the words strict or narrow, so I try not to use those, but I mean, a relatively narrow test. So, and just a final point, my learned friend relies on Mr. Justice Brightman at page 578F, where Mr. Justice Brightman does a sort of thought experiment, and he says, if we were dealing with, he says, the erection of a building or structure, then I wouldn't have said that the interest costs on the finance that you obtain to pay for it would be within those words. That's not a cost incurred on the erection of the building or structure. And he says, well, applying that here, I don't think that interest fees would naturally be described as on the provision of plant. And he said it's kind of drafting elegance. But it's interesting the parallel he's drawing, the erection of the building, not something much wider or more general, but the erection. So it's that final acquisition which is consistent with my case.
Where do you say he's making that specific point? Sorry,
So at F, so that the argument starts just below D on page 578.
578. Right, yes, thank you.
And my learned friend may develop the point, but it's his point, and I just wanted to sort of flag it.
You're saying the analogy he makes is with the erection of the building rather than designing the building.
Yes, yes. It's the equivalent of the acquisition costs, so the fabrication, the purchase, the installation. Possibly the design, the very final design drawing, but it's the actual provision. So then the House of Lords, there are three important judgments. Lord Wilberforce is at 582, and at H he summarises the taxpayer's argument. And you can see there that the taxpayer is, one of his arguments is that if you get it under commercial accounting, you should get it under capital allowances. And that is flatly rejected by each and every of the lordships, the majority. And then the contention of the revenue is set out at page 583A. And they make the point it's not enough that in popular language it sounds like it's on the provision of, or part of the cost rather, part of the cost. It needs to be within the statutory words. And that is a point that is repeated throughout, time and time again, that the House of Lords regard themselves, Lord Wilberforce regards himself as engaged in an exercise of statutory construction. And what he says, and what the other lordships say, can't just be distinguished or dismissed as, oh no, that was a case about finance costs. The case is about the meaning of the words, and it whatever they say matters for this case. I just wanted to pick up at page 584. So Lord Wilberforce here he's considering a Canadian case, so it's relied on by the taxpayer. Now the Canadian case, and this is just at F to G, the Canadian case has different statutory language. And the relevant statutory expression was the capital cost to the taxpayer of property. Now, Lord Wilberforce goes on to say this is clearly a more liberal wording. But it's interesting to see what is actually considered to be covered by that more liberal wording. And what Mr. Justice Carr considers that could include, so the Canadian judge, certainly the price, probably legal costs, might well include the cost of moving the asset to the place of use. And in his opinion, would include the cost to him of borrowing the capital required. So then Lord Wilberforce goes on to say, it's obviously, that's all under different statutes, and he says just above H, it uses a different expression, and his policy as regards deductions seems to be more liberal than the UK statute. The expression capital cost to the taxpayer, so the Canadian words, makes it easier to include within deductible expenditure costs which the particular taxpayer incurs. In other words, cost to him, whereas the UK words more objectively focus on expenditure directly related to the plant. The one draws a line around the taxpayer and the plant, the other confines the limiting curve to the plant itself. And I say that's our case. You draw the limiting curve around the plant in question, and you ask, in respect of that, what are the acts that make up the provision of that? What's the mode of provision? Fabrication, purchase, construction, installation of the plant in question. And you can't, and what really is being described is the acquisition cost of the...
But anybody who built this wind farm, these wind farms, would have to have incurred, would have to have had the studies done.
To get the regulatory consent to trade at all.
Whereas what this seems to be talking about is it's only because this was it's only because of the characteristics of this taxpayer that it had to borrow the money to pay for the oil rig. If it had been a much bigger company, it could have just paid it out of the petty cash or whatever. But here we're not dealing with expenditure which the companies only had to incur because of some special characteristic that they had. Isn't that the difference that he's...
Well, but I think that the answer and the statutory interpretation that is provided by the House of Lords, it doesn't just, that's not, if you like, that's not the ratio of it, or the reasoning is the words don't allow it. It's not the cost to the taxpayer. It's the cost incurred on, it's the expenditure incurred on the provision of the plant in question. And you just can't answer those. Expenditure doesn't answer to that if it's incurred to get regulatory consents to trade at all when you've only got a rough idea of what the plant is. It just doesn't answer to those words. You draw a confining or limiting curve around the plant itself. And that's a point of statutory interpretation. It's a really important point about how you approach the words and their expansiveness or not, how liberal it is. And again at E, Lord Wilberforce says, the words expenditure on the provision...
Sorry, page...
So this is page 585.
585 E.
Sorry, I should really start at B. He says, an important principle of the law of taxation is in the absence of clear contrary direction, taxpayers in objectively similar situations will receive similar tax treatment. The taxpayer's argument in the present case doesn't bring this about. And that's because the fact is everyone agrees that you don't get the cost of a capital raising, and you're not allowed to carve out a special rule for influence, because the House of Lords can't see any difference between the costs of a capital raising. These are just different ways open to a taxpayer of raising money. And what I say is, first of all, you judge whether taxpayers are in objectively similar situations by the statutory words and the statutory policy. You don't just say, oh, well, in the abstract, they look like they've got to expend this, so the legislation must allow it. That's not the analysis. You have to ask, well, you do actually have to begin with the test and the policy, and then by reference to that, assess whether you are fairly treating the taxpayers. Now, on HMRC's test, all the expenditure you choose in deciding what kettle to buy for your office is not allowable. Now, it's more mundane and humdrum than the expenditure on the studies and assessments in relation to a wind farm, but the character is the same. And and the Court will have their own example of a restaurateur. No allowance, the Court of Appeals say, for the costs of choosing the material. But why shouldn't he get his costs of getting a consultant to tell him whether this will attract customers into the site and so on? And yet Orsted do. And there's no difference between them. So you assess this principle by reference to the statutory policy and the statutory words, and then, of course, the facts. And we rely on the words at E to F. And what you get here is the words expenditure on the provision of do not appear to me to be designed for this purpose. So that's to allow the taxpayer to get relief if he chooses interest but not otherwise. They focus attention on the plant and the expenditure on the plant. And again, we say that's exactly the revenues case, not limiting it necessarily to the bare purchase price. So look where we begin. We begin with the bare purchase price, but including such items as transport and installation, in any event not extending to expenditure more remote in purpose. So it is looking at items analogous to transport. In other words, items without which the provision is incomplete. And
I mean, might it be said, I mean, clearly the approach that you're putting forward to us is that you start from your core and indisputable case and move out to some degree. And this is the curve related to the plant that Lord Wilberforce is talking about. I mean, might it be said that your test is whether or not the expense would be incurred even if the plant does not actually eventuate? Because the Court of Appeal's approach, all these expenses on surveys and so on, even if the plant did not go ahead, would have been incurred.
Yes, I would be nervous of a but-for test, because I would, if that's the implication.
Right. Whereas what I was thinking of was transportation and things very close. Yeah. They are dependent on the plant actually going ahead, so to speak. The whole enterprise going ahead.
There is plant, yes.
Okay, there is plant. Yeah. But if you think, well, what would have happened if there was no plant, you would not have had the cost of transportation.
Yes.
Whereas with surveys and so on, they would have been incurred irrespective of whether the plant goes ahead.
And that's another way of saying, if you're asking what's their object, their immediate object under the agreement with the provider of the EIA surveys or assessments, the company that's going to survey the site for the risk of harm to benthos, what you get in return for that expenditure, its immediate object, the effect of expending that money, in the words of Lord Russell, is, and this is how we phrase it, advice and data, which puts you in a position to make the necessary business decisions that you need to make. The upper tribunal, and
just so I can finish, and it would mean that design costs, I mean, the costs of the final sort of building are realistically not going to be incurred unless the project goes ahead, so to speak. It would be highly unlikely that would be the case. Whereas very preliminary designs might well be incurred in any event, I suppose.
Yes. And I would accept that distinction as a means of identifying. I suppose what I would say is in the context of this legislation, those activities and their different object and purpose and role in the business. So put this better. There is a distinction in the context of this statutory test and this statutory relief between the process of design and development, I suppose you put it, because the object of that is to inform, to enable you to make decisions, to allow you to design or model and test. And it's an incredibly important activity, business activity, but it's different in nature for the purposes of this test to then the separate activity of actually implementing your design or creating, making constructing, doing, building the plant. And that distinction might not matter in another context, but it does matter here. And that's the result of Parliament's words, and the fact that this, in the end, is a really for wear and tear of the plant you eventually build. Now,
so do you support the upper tribunal's reasoning?
Yes, so we support, they put it very metaphorically, or perhaps rather too philosophically, but we support what they say. We've maybe described it differently. And they say there's a difference between conceiving of and then the actual making and doing. And the criticism made of that by the Court of Appeal, or impliedly, is that, well, why do you distinguish the intellectual from the physical? And we say, first of all, that's rather that's rather unfair to all the professionals involved in actually the construction project. But it's also, it's a sort of false distinction, because it's actually a distinction, so it's not just a false distinction, it's a distinction that's made by the words, and it's because they're different activities with different objects or purposes. And the upper tribunal put it quite metaphysically, is the word I was trying to find. But that is the distinction.
Yes, so it's not you say it's not a distinction between physically thick and cerebral things.
Yeah.
So going back to the dry dock, you say, yes, professional fees, if you've got somebody who has to be on site checking that the concrete they're pouring out is actually the right quality specified, so it will make the dry dock impervious. That's a cerebral activity, but you would say, well, that is part of the provision of it, right? But this is more kind of blue sky thinking that you say is not.
Yes, and it becomes less and less blue sky as you go along. The rough idea becomes closer and closer to something that you might make. But in the end, it's still, if you get an extra bit of data, you might still actually decide to scrap that bit and change it to this. And in the end, that's still part of the conceptualizing, the designing, and it's not, there's no reason why it should be within the words. It's not within the ordinary meaning of the words, and we say nothing in the cases extends it. Now,
you place any reliance on what Lord Wilberforce said at the bottom of page 584.
584.
Just after the passage you took us to, where he says, whereas the UK words more objectively focus on expenditure directly related to the plant. It's about 4 or 5 lines up from the bottom.
So we...
and then he perhaps illustrates what he means by that.
Yes.
In the passage you did take us through later on, including transport and installation, but not extending to expenditure more remote in purpose.
Yes, so we would say he's using directly related there in a very focused way to describe close and proximate expenditure in relation to the plant in question. Yeah. And it's obviously a gloss, and therefore it can be taken and turned into some much wider, there's a danger. But ultimately, it's a fair description we would say, in the context of this.
But you're saying the reason why Lord Wilberforce thought it was not included is because it's not sufficiently directly related, rather than this more, oh, well, if we include it, then it's going to distinguish unfairly between one taxpayer and another taxpayer.
Well, that's just part of the supporting reasoning in this particular case. In a context where the taxpayer was arguing for a special treatment for interest costs, that no one appears to support a deduction for the costs for capital raising. So that, first of all, has to be understood in that context. And then secondly, as we've just been discussing, you assess whether you are breaching that principle in light of the context of the relief and the fact.
Well, thank you, Ms Wilson. We'll resume at 2 o'clock. You'll have 35 minutes left then. Thank you very much. 2 o'clock, please.